go.
Okay, guys.
All right. Good
Awesome.
morning, KW Prosperity and viewers. Today it is Shift Tactic 10, not 9, Shift Tactic 10, Expand the Options Creative Financing, which starts on page 197. So as Mary Beth and I were talking before we got on the call, we're probably about 2/3 of the way through the book. And as we've talked about, each chapter is really kind of expanding on the last. And today, Mary Beth and I wanted to bring on Shane Forrest with Atlantic Home Loans because really Tactic 10 is all about creative financing options, and who better to bring on than a loan officer. So thank you for being on with us today, Shane.
All right, no problem.
Our loan officer.
Yeah.
Thank you.
And
you for having me,
also
guys.
the reason we want you to come on here is because some of the things have probably changed since the last time this book was even written 10 years ago. So there may be some different options, and maybe some products have gone away a bit as well. So we're glad to have you.
Yeah, no problem.
So Shane, before we dive into Shift Tactic 10, do you want to just take like 2-3 minutes, just give us an update on what the market's looking like, or what's going on in your world?
Yeah, we've at least seen a little bit of a settling this week, which has been great. You know, it hasn't been as tumultuous as it has been as far as rates moving up and down and having 2 to 3 rates a day. I think there's only been one day this week that we've had multiple rates, which for the last 3 weeks, it was a commonplace that we would come out at 3.5 in the morning, and then we'd be down to 3.25 at 2 o'clock, and then back up to 3.625 at the end of the day. That has calmed down, which has been great. It's more of a sane atmosphere for people that are under contract and looking to lock. Jumbo loans, tougher to get. You know, they're getting tougher and tougher by the day. A lot of major lenders are saying.
And what's the jumbo benchmark?
765,000. So any loan above that, they're getting tougher to get. We can do it, but our pretty much our 10 and our 15% down option has gone away at this point, and they want more reserves. So we can do 20 and 30% down, but as you get to higher purchase prices, you'll probably need to put more money down than you could have 5 weeks ago, you know, but still an option. FHA loans still an option as well, but you need to pay points, unfortunately. So, but
what does that look like? What do you mean by that?
Yeah, like a customer came to me, 650 credit score, which normally with FHA, like that's what you get all the time, 650, 700 or 700 and below, which is like average to below average credit, right? And FHA is normally great with that, but a lot of lenders have said, we're not doing anything below 680 credit score. We won't do it. So I had a customer come to me on Friday saying, hey, I'm like 2 weeks away from closing and the lender's no longer doing below 680 credit. I could do the loan, but we had to charge her like 1 3/4 points. When someone's putting 3 and 3.5% down, they don't have room for another 2 points, you know? So she actually didn't have the money to do it.
So just to be clear with agents that may not know what we're talking about, a point would be 1% of the loan amount?
Of the loan amount. Yeah. So on a $400,000 purchase, she's got to pay like another $7,000 now, $7,400 just to get the loan done, right? It's not going towards your down payment, and it's just like additional closing costs. So really a tougher atmosphere for FHA right now, just due to rising unemployment. And, you know, the mortgage investors are thinking, hey, if someone is going to default on their loan in the future and lose their job, it might be that person that doesn't have the most perfect scenario to start with, you know? So.
And when would a buyer typically, I mean, this guy called you to let you know that his lender was not going to move forward with his loan, but when would a buyer typically find this out, that their lender is not going to go ahead and fund their loan because of a credit score? And when should they kind of check in on that?
This was just they were in process with the lender, and the lender just said, sorry, can't fund it. And I do understand what they mean by that. There's just no funding source. There's nobody to back you on that. That they were in process. I don't think they had locked their rate. I don't know if it would have made a difference either. But
so to that point, if somebody is out there and they are in that process and they know their credit score is a little iffy, maybe they should be checking with their lender to see, is this going to affect if we're able to close or not?
Yeah.
If any new guidelines came out. Yeah.
Yeah, absolutely. it's tough. You know, sometimes there's nothing you can do, you know.
Sure.
I had been working with a customer on a renovation loan. We hadn't done the appraisal or anything yet or really started, but you know, I said, hey, I can't do anything. We put our renovation loan on suspension. At this point, you know, I just found one of my buddies and I called like 5 or 6 guys, and 3 or 4 of them all said, no, we're not doing them. We suspended it. We got rid of the program. So it's a common issue in this market, but hopefully things are settling. We'll see. And the stock market has done well this week, so that's positive.
Christian, remind us, we have some viewers both on Facebook and online who are not necessarily with our Keller Williams Prosperity Office. Remind us how long you've been in the industry, or, you know, in the mortgage world, and talk to us a little bit about your experience.
Yeah, so I've been in the industry since 1997. I've been with Atlantic Home Loans for 17 of those years.
Impressive.
And you know, we're one of the lenders in the KW Prosperity or Wayne office, and we also work with 6 other Keller Williams offices in northern New Jersey as an in-house lender. So.
No, and thank you for sharing that. And I think one thing that I just wanted to touch on as we go into a couple things in the chapter, at the very end of the chapter, because we're going to go into a lot of different financing options, one of the things that Gary writes on page 219 is, he says, so how does a real estate agent add master creative financing to their ever-growing list of important tasks to do? And he writes, they don't. You only need to have a clear understanding of the market, the players, and their options. And a big part of that, as he writes throughout this chapter, is aligning yourself with a strong loan officer who has experience and who is solution-based, and not somebody that you know, can't
Alarmist.
come up with some solutions. Yeah. So did you get a chance, Shane? I know I sent you the packet. I don't know if you got a chance to read this chapter, but is there anything that you can talk to us about, some maybe creative situations that you've experienced maybe in just the last couple of weeks?
I've seen a lot of creative, I should say, actions by our partners, by appraisers doing a great job. I mean, appraisers in our industry, they're like the doctors and the grocery store workers. Like, appraisers are just keep going into these homes, right, of people they don't know. They're wearing masks and gloves, but they just keep doing it. And I give them a lot of credit. And these notaries from the title companies that are still going into people's homes or going in and meeting with people they don't know. And normally they're 2 different cars, or they're doing it through glass and not really meeting them. But I think they're the heroes of our real estate industry, that they've been creative in helping all of us get deals done. When my wife probably wouldn't want me to do that, they're doing it, you know? So you got to give those guys credit.
If we go into each one, I think Shane's going to be able to speak to each specific strategy here, because the first one that we're speaking about is an area that sellers can be creative in, and then it says an area where buyers can be creative. So first of all, the statement of the day says money talks and often says goodbye. And so we need to be mindful as to where we are spending our dollars and understanding how it all works. But when we look at page 200, it gives us the 3 areas of creative financing. And the first one is creative things sellers can do to sell their home. And so when we talk about that, there are 9 things here that a seller can do to sell their home in a challenging market. If I were to shoot down through them, and maybe this is where we are going to need Shane's input on quite a bit. Seller contributions, a seller giving a contribution at closing. Seller funded permanent buy down. So does a seller buy down? Maybe that FHA buyer who, you know, needs to buy points, maybe that's an option that a seller's willing to go ahead and purchase points for an FHA purchaser to get their home to move. Seller funded.
You probably wouldn't need to buy the rate down in this environment, because it's going to be a low rate. It's just paying the points, right? Or helping them with closing costs, which you can still do a seller concession now as long as the home appraises for it. So that's certainly an option. Yeah.
Yeah. So it's saying owner financing, contract for deeds, seller second, seller assisted down payment. I guess we would maybe look at that, and wraparound assumable mortgages, and owner financing. So with the seller being creative, what kind of things can you speak to on that, Shane?
Yeah,
What would a seller?
you know, wrap around and assumable mortgages really aren't that common right in this market, not post a Great Recession. We saw some of those before 2008, but they're really not that big now. But seller held seconds we're still doing. Seller concessions towards closing costs, a great option. Although they're a lot of times looked at as a negative when you're in a multiple bid scenario. You know, a lot of times they see that as a sign of weakness because you can't pay your closing costs. I kind of disagree with that, but I guess it does mean that the home has to appraise for a higher number in order to justify it. But seller
Well, and in this
concession,
scenario and in this temperature, I think we might be dealing with some sellers that have a great motivation. They need to sell
yeah,
and they're not getting buyers out. So how could they make their marketing be more attractive to the buyers?
that could certainly come back, right? We could definitely see that coming back as I've seen more home sale contingencies come back over the last 2 to 3 weeks, where buyers have just said, you know what, like based on what's going on, I'm making a contingent on the sale of my home when they clearly qualify not contingent, you know? So we could see more seller concessions and, you know, maybe people using home equity lines of credit because maybe they lost money in the stock market, so they're using a home equity line of credit on their current home to use that down payment on the home that they're purchasing, which is totally fine.
Yeah, yeah. So that would be on the purchasing. But with the seller, another thing, I guess a question would be a seller's concession. How does that affect a transaction? If the
You just
seller's
have
going to
to,
go ahead and do one.
yeah, you just have to make sure that you've put it in from the start. And if you're buying a home for 400,000, it looks like the closing costs are going to be 11,000. You could probably do a $10,000 seller concession, so make the purchase price 410 with a $10,000 seller concession, and then you know that your payment is going to increase by a couple bucks, not much, maybe 40, 45 bucks in that scenario per month, but they save, you know, that $10,000 in their pocket that they would have had to pay out towards closing costs. So it's finance. It's a great thing to do with these rates being so low. Very smart to finance in those closing costs into the deal. People say, well, then you pay interest over them over the life of the loan. Sure, but I've got an extra 10 grand in my pocket now versus saving money down the road, you know? And a lot of people would take that cash now, especially in this environment.
One thing that Gary writes as we're talking about seller concessions on page 203, he says most lenders limit seller closing cost contributions to between 3% and 9% of the sales price, depending on how much the buyer pays as a down payment. However, he also puts, just be aware that if a seller pays more than 6%, it could likely affect the appraisal.
Yeah, most programs will be at 6%, but on a conventional loan, if you're putting like 5% down, you're capped at a 3% seller concession, which can affect you on a lower purchase price in our area where taxes might be higher. In Passaic County, you'll often run into that problem that 3% will not be enough, which is where 5% down, FHA will have the edge over a conventional loan, though you'll be able to probably wrap in all your closing costs or close to it.
Okay, so let's break that down a little bit because I got that. But for maybe some agents that are listening to this, because this is to the point that you mentioned before at the end of the chapter, you don't need to know how to sell this or how to guide somebody. You need to know Shane, so Shane can go ahead and do that for you. Yet, in order for your client to pick up the phone or to take Shane's call, they're going to need to know that you really do believe it's a benefit for them to talk to Shane and you have some knowledge as to how this works. So if I'm a buyer and I'm going to take a concession, you just rattled off a couple things. The FHA with the 5% down is stronger than the conventional potentially if they have the seller concession. Let's break that down a little bit. I'm buying a house, and you also mentioned Passaic County. You buy a house for, let's say, $350,000, $400,000. You mentioned a 3%. So 3% of 400 is 12,000.
Yeah.
I think what you're saying is the taxes and all the closing, it might not actually.
Yeah, so you'll have in Passaic County, you would have that type of problem probably where it's like a 250 or 200 purchase price for lower. Maybe it's a condo or something, and the taxes are $8,000. Your closing costs are probably going to be $9,000 because of where my purchase price is of $200,000. I can only do a $6,000 seller concession. I'll be capped with a conventional loan. You'll be able to put a good amount of your closing costs in, but not all of them. So conventional loans will cap you, and then you work on the premise of conventional loans really are one of your only options on a condo or townhome, because FHA really has kind of taken themselves out of the condo market unless your complex is FHA approved, which is kind of a rigorous process.
Yeah. You know, and to that point, it's just paperwork, right? It's paperwork and data that the
Yeah.
association needs to pull together and provide. And a lot of times, I mean, as an agent, when I was an agent, there were a few complexes that we were a part of helping them get approved again, because the administrative staff didn't realize how simple of a process it
Yeah.
was. It's just what they were told, we're not filling that out.
Yeah.
So if you are working with a buyer who is in condo searching, you absolutely have to talk to Shane or your local lender. And local is really important with that, because complexes may change weekly, and maybe a lender that doesn't know that complex may not know that it is or it is not approved for FHA loans. So Matt, go ahead into the next thing.
Yeah, and then as we're looking at creative things buyers can do to purchase a home, and Shane, it seems like you might have gotten muted for some reason. But it says creative things buyers can do to purchase a home. There's 8 of them. It's number 1, gift funding. Number 2, selling and refinancing existing assets. Number 3, non-occupant co-borrowers. Number 4, using a 401k. 5, temporary IRA transfer. 6, pledged asset mortgage. Number 7, equity transfer and bridge loan. And 8, employer assisted mortgage.
I want to hear from Shane. I want him to break them down, because all of these sound great, and I have knowledge on most of them, and I would love for our agents to have knowledge on most of them. There's 8 of them. So gift funding, what is that?
Yeah, so gifts, very, very common when you're purchasing a home, that people take money from gifts or their 401k to come up with the down payment, especially when they're doing, we see a lot of this when somebody has a good amount of equity in their current home and they want to put in an offer not contingent on the home that they're purchasing, right? So maybe I own a home in Wanacue that's worth, $400,000. I've got a good amount of equity in the home. And I know I'm going to get that. I'm just not going to get it before I close on the home in Wayne for 700, right? So in order to do that, I might say, hey, mom and dad, can you give me a gift of $100,000? Hey, I'm only going to need it for probably the next 90 to 120 days, but can you give it to me? And then once I sell my Wanacue home, I'll pay you back. Or maybe mom and dad are just well off and they say, hey, I'm going to give you $200,000 when you're purchasing this home. So a gift can be done. Most programs.
Is there a max on a gift?
No. I mean, I've seen them for $200,000 and $300,000 and $400,000. Now the donors.
It has to be seasoned, right?
No. I mean, I can have you get the money in your account today and you can close on Monday. So you just have to show that paper trail. And I do have a customer who is getting a gift of $90,000 from their mother that's coming into the account today, and they're closing next Friday. Now, I would have liked for them to done that a little quicker, because you can't, then you have to document it. I have to prove that it came from mom's account and it came out of her checking account. I have to prove.
What are some of the approved sources for financial gifts? Because I know you mentioned like family members, maybe grandparents, but it can't just be anyone, correct? It has to. No,
it can't. Yeah, conventional loans say it has to be a blood relative, yeah, or a fiance. But it can't be your buddy down the street or your coworker. However, FHA, that's a great thing about FHA. It just has to be a good friend. So it can pretty much be anyone.
Pretty good friend if they're giving you money.
Yeah. I had a guy who said, I have a friend from my village in Nigeria, and I haven't seen him in 15 years, but he's going to give me a gift, and we got it approved. Normally in that scenario, what I do for an FHA loan, I say, hey, write an explanation as to why this person is a good friend. We'll have the underwriter review it, and if they okay it, you get the gift. But I haven't seen many of them denied. So FHA is great for that, for just allowing you to get a gift from, maybe your buddy that you've known for 20 years, right? From high school or whatever, so.
Or Nigeria in the village, right?
Yes, yeah.
That sounds like an old email that went around a couple of years ago.
Yeah.
How about selling and refinancing existing assets? That's something that I think we really should be tapping into, especially in our area, that we do have some some equity built into some of these houses.
Yeah, and that is a common scenario that we see people pulling from a home equity line of credit. And I tell people all the time, if you're looking to sell your home, get a home equity line of credit now, because right now, especially, you can get them at very low rates. You only pay interest on what you use. It's like a credit card that's tied to your home. So a great option, especially when you might be selling a fixer-upper. I can take out $100,000 home equity line of credit, maybe spend 20 on fixing things up and getting it ready to sell, and then use the other 80 to put as a down payment on the home that I'm buying, right? Because a lot of buyers don't realize that 2 weeks after attorney review, I've got to come up with a significant down payment, right? And
Right.
if all my money's in my home, how do I do that? You know, so you could go to a family member could give you a gift. You could pull from your own 401k, or you could pull from a home equity line of credit. Those are the most common.
Okay. How about a non-occupant co-borrower?
Yeah, happens quite a bit where
Often, right?
maybe
I
a
think my
young
mom was
couple.
one for one of my properties.
Yeah, I mean, maybe young couple just got married. Maybe they're right out of college. They might not have the best credit, or maybe I see that a lot with doctors that are like doing their fellowship, where they only make like maybe $40,000-$50,000 a year in their fellowship. A family member co-signs with the spouse or with them, and then 2 years later they're making $300,000 a year, and they refinance and take that cosigner off, right? Normally the cosigner wants an exit strategy. They want to know,
Yeah.
I'm only doing this for 2 to 3 years before my credit is encumbered with this debt,
Well, and then also they want to maybe, in my situation, my mom wants to be positioned to go and buy something for herself. And with the income that she's got in her retirement stage, she might not be able to be qualified to hold two mortgages. So we
Yeah.
got to get her off. We got to get her off.
Correct. Yeah. And normally the only way to do that is to refinance. That's a key factor. Yeah.
Now, let me ask you though, if she, and this is a live question, is if she is the primary or she co-signed, so are we doing a nominal purchase to get her off, or are we just refining?
As long as you're on title, as long as you're
Yeah.
on title, even if you're not on the mortgage, you could still come on the mortgage, and that would be
Gotcha.
fine. Yeah.
Okay. You talked about using a 401k. How about a temporary IRA transfer?
Yeah, IRAs are great, especially for people that are retired. They're a fantastic income and asset source. Like we have a program where, I just go off of monies that you have in an IRA. And if someone has, let's say, $400,000 in an IRA, I can amortize income that they could pull from that IRA over the next 36 months and qualify them without any other income. So IRAs are fantastic. You normally have to be 62 or older for that to work, but for retired individuals, like an IRA can make the deal and get the deal done, even if you don't plan on pulling $5,000 to $6,000 a month from that. So IRAs are fantastic. Yeah.
What about pledge asset mortgage and equity transfer and bridge loans?
Bridge loans, we don't see that much of these days. I normally will tell people, bridge loans we can do. Well, 5 weeks ago, I could do a bridge loan at 75% financing. It would be at like 6.5% with 1 point, and you could do a bridge loan. However, you can go out and get a home equity line of credit at like 3.75% or 4%, pay no closing costs other than a $400 cancellation fee. You just can't have the home listed at the time of your application. So that's what I tell people to do. Before you list your home, get the home equity line of credit. There's your bridge loan. You will pay a $400 cancellation fee, but I've got a much cheaper option, and they'll normally let you go to like 80 or 85% of the total value of that home. So we kind of create our own.
As you're talking, I'm listening. I'm like, there's so many people that think they know what they're doing, right? There's so many buyers or even agents that are advising clients, and they think they know the best case scenario.
Yeah.
And, oh yeah, I'm taking this or I'm doing that. And the reality is they really, especially with the rates and where everything is, they should really be speaking to somebody like yourself to explore all opportunities for themselves.
Yeah.
And right now, while we have an income issue with some people because of furlough or, you know, just what we might be experiencing in the next couple months also, these might be messages that some people need to hear right now. Go get that equity line set up.
Yeah.
Because what is really the difference between an equity line and a bridge loan? You're really just using the equity from a previous asset, whether you're
Absolutely. It's the same
attaching it
thing.
or,
Yep.
yeah. So you
Essentially,
just,
they're both mortgages, and you're just getting a much better deal on the home equity line of credit. You just got to plan ahead, right? I mean, and if you know Carol Lee Cherico, she's one of the top producers at the Keller Williams and Woodcliff Lake, and she'll have me talk to people that are going to list their home, have no intention of getting a new mortgage. But she's like, I need you to talk to Shane before you list your home. We're going to list your home in a month. Talk to Shane now, get that set up. That way you have that. And you know, they're not going to get a mortgage. They're just going to get a home equity line. So they have cash, because a lot of people might have have all those assets in their home that they can't pull out until they sell it, you know?
right. And for the high S behaviors, the very safe behaviors, it's like my mom, she would probably say, oh no, I don't want to touch it until, you know, that could be very risky. And the, you know, if you have somebody explaining it to you the way Shane is, it's just options. It's great to know that you have options.
You don't have to use it. I have a home equity line of credit on my home. I've never used it yet. Never, but at least it's there. It's an option if I need it, you know?
So I guess with the last 5 minutes that we have, do you want to switch gears to the last column, which was creative things lenders can do to finance a transaction? So there's 8 of them. I'll quickly read through them, and maybe if you want to pick like just 2 or 3 of them to speak on. Number 1, it has lender funded buy down. Number 2, Fannie Mae's My Community Mortgage. Number 3, running scenarios with automated underwriting systems. Number 4, adjusting amortization period to lower payment. Number 5, adjusting interest rates to cover closing costs. Number 6, state, province, and local grant or bond programs. 7, mortgage credit certificate. And number 8, private lending.
Yeah, so some of those are tough. The My Community programs and the bond programs, they work in normal markets, but we really don't have that much of a normal market in the tri-state area. You try and come in with an offer with that, and you know, a lot of those programs, the My Community or the state bond programs, like the lender approves it and then you got to send it to the state. So there's no way I can do a 30 to 40 day closing. If the state gets busy, it might be a 70-day closing. It's very tough in our market. I know in our Florida office that the bonds programs, and our Delaware office, they love the bond programs and they use them all the time, and they don't have the 4, 5, 6 offers on properties like we do. So, you know, it's just not as competitive there. So they use them quite often. So, the New York, New Jersey market, it's kind of tough. We don't see a lot of them in our area, but they're an option. We have them. I don't do too many of them. I give pre-approvals for them and then they don't get accepted, but they're available. So.
How about a lender credit? Because I think that's more common, and I literally just learned about it a few years ago. How could that help a buyer?
All the time we do lender credits. I mean, we by compliance, you know, Atlantic Home Loans has to charge every customer. Every one of my customers will pay a 1095 application and commitment fee. Depending on the state, it might be called something different, but it's 1095. However, based on the loan amount or the rate for that day, like I might quote someone 3.25% today with 0 points and no lender credit. And the rates might get a little bit better, but not enough for us to go down to 3.125. So in that scenario, the next day I might quote them 3.25, but we might give them a 4.95 lender credit. So rates got a little better, but not better for the rate to go down, but good enough for me to give the customer cash at the closing, a lender credit coming down to decrease what you're bringing to the closing. So really, we do that all the time. Probably 30% of the time when I quote a rate, there might be a lender credit, there might not, but 30% of the time, maybe it's $1,000, maybe it's $200, but yeah, they're common, especially in this type of refinance market. You'll have people that say, hey, I want a $3,000 lender credit, even if I have to take a 0.25% above in rate. I just want to finance it all in because I'm going to be in this home only for 5 more years. My son's in high school. and then we're moving to a smaller home. So I don't want to have to pay that cash. I'll finance it into the rate. So kind of a smart tactic as long as you can get that pricing and get the right rate.
So Shane,
Yeah.
Remember, I thought I had a question. I was just going to say, Mary Beth and I have to hop on another call fairly soon. So I wanted to do, before we do that, can you please share your phone number to the audience? So people on Facebook, I know in our private group and our group has it, but for people who are watching who may not, can you provide the best contact information for you? So that way, if they have questions on any of the things we discussed, you're going to be the expert on this
Yeah.
to really go to.
Yeah. So, you know, if you have any questions, like you can see my name appearing as Shane Force there. So my website is shaneforce.com, just my name, and my phone number 973-219-4195. But if you ever lose it, you know, you can always go to my website and it has all my contact information there.
Perfect.
Shane
Thank you
Force, may the
so
force be with you.
Yes, may the
Thank
force be
you.
with you. Shane, thank you so much. You gave so much knowledge today, so much insight onto this chapter. We're incredibly thankful and grateful
Yeah.
for your time. For those of you who are watching, we do a Friday call every week with Shane at 1 p.m. and it's at this exact same Zoom link. So we'll be tomorrow, with it being Good Friday, we're not going to have a shift call and we're not going to have a call with Shane. However, on Monday, we'll be picking back up with shift tactic number 11, which is master the market of the moment, short sales, foreclosures, and REOs. That starts on page 223, so we'll be picking that up on Monday.
And then we'll be back with Shane next Friday,
Yeah.
the 17th,
Sounds good.
1 o'clock.
All right, thanks, guys.
All right, guys, have a good one.
Have
Great
a blessed
weekend.
weekend.
Have a good weekend.